Hello everybody, and welcome back to the Central Arizona VITA Network's 2021 Tax Law Training for VITA. In this segment, we're going to finish our discussion on credits with a review of the new credits that were enacted by the CARES legislation. Then we're going to review some of the test questions and resources you might have to be able to answer those. So let's get started. Here we're going to just do a review of these acts. These were the tax acts that got passed as a result of the coronavirus thing. There were three of them. There was the first CARES Act, and then there was the Families First Act, there was the Secure Act and then the Families First Act that came about after Biden was elected. But so the Secure Act did several things. It changed a lot of things about IRA distributions. It changed stuff about qualified charitable distributions. It changed the required minimum distribution age. And just to we call those RMDs. You're going to hear that acronym a lot. Once you've got an IRA that you've been putting into, once you hit age, well, it used to be 70 and a half, you have to start taking required minimum distributions. And this act changed the age. It increased the age. It changed what it did to inherited IRAs. They added another exception to that 10% penalty for early distributions. Expansion of Section 529 plans. Those used to be just for college, and now they made them for K through 12 as well. You can put in money to pay for private schools. Those are things that if you're really curious about them, they're in the Pub 4491. That's the textbook I told you about, and it's only electronic, but you can go kind of read more details about those things too. So here's the important things we're going to go over that really affect us day to day. And in that Secure Act, that's that Retirement Act kind of, it repealed the maximum age for making contributions to a traditional IRA. We alluded to this yesterday. It used to be that once you turn 70 and a half, even though you were working, you got that part-time job and you were working, you could not make contributions to an IRA. They repealed that. As long as you're working, as long as you have earned income and you're 80 years old, you can make contributions to an IRA. And then also the age for beginning required minimum distributions. It used to be the year you turn 70 and a half. That was kind of confusing to think. Now they make it 72. And, some of you may be asking, well, so what? What was the big deal about that? And I'll tell you the big deal about that. I'm in that kind of situation. So I retired and I'm getting a pension. My wife's getting Social Security. I'm going to start getting Social Security at 70. I don't really need that IRA money. And if I can, I'd just rather let it sit there, because maybe if I take a distribution out of the IRA, it makes my Social Security taxable, or it bumps me into a higher tax bracket. I just rather let it sit there. But IRS is saying, no. You put away for retirement. Once you're retired, we're going to make you start taking some of that. So now they raise the age to 72 anyway, to where you have to start taking these RMDs. I'm going to give you a little reminder here too. Remember, if you're putting money into a Roth IRA, there is no RMD requirement for that Roth IRA. So that's another tax planning strategy that you might think of, another benefit of putting money into the Roth instead of a traditional IRA. So let's keep going here. The Families First Act, Gene kind of talked about that sick leave credit. First of all, there's two parts of it. Part one, and this is a sick leave credit for self-employed individuals. A lot of folks who work for at least larger companies, right? Actually, in Arizona here, they made it a requirement that that all employers provide some level of sick leave for folks. But there was never anything for self-employed people. If you work for yourself, your whole income is driving Uber or Lyft or doing lawn maintenance or preparing tax returns, maybe, that's your only income. There is no sick leave. I mean, if you're sick, you don't make any money. Well, this Families First Act gave you a credit if you're self-employed. And this was all due to COVID, because there's a lot of people, they couldn't work. And so there's a limit to it, and it's $511 a day, but it's really either the amount that you normally make, and that's kind of a complicated calculation, but there's a way to come to that, or the maximum of 511. So what are the requirements to be able to get this credit? If you're self-employed, you've got to be unable to work because you were quarantined or there was an isolation order. You were advised to quarantine because of COVID-19. So maybe you didn't even get it. Maybe you were just one of those people who were exposed and you were told to quarantine. Okay. You had symptoms and you sought a medical diagnosis. And now here's that calculation. You have to take your profit for the year, and sometimes that's an estimate, right? But you have to take the profit by the year, divide it by 260, and then you get that. Now, big caveat here. Originally, the CARES Act put this in place for the year 2020. It was for all the 2020 year. Now the Families First Act came in. This was the Biden one that came in. And they said, okay, yeah, COVID was still a big thing, but now we've got vaccines and all of that. We're only going to allow this credit if this affected you between January 1st and March 31st.
Hey, Jim, can I clarify a couple things?
Yes, by all means.
First off, don't sweat the calculation. The software does it. You're going to put it, you're just going to click, we'll show you in a few screens, that you're just going to click a radio button that says, yes, this is the reason why I missed the number of days, and I had COVID-19 symptoms, and that's it. And then the software will calculate all the stuff for you. The only time you would really need to know that is if your client asked you about that and said, well, how did you come up with that number? And the key here is that this started in 2020 under the CARES Act. It was from April 1st through December 31st. And then with the American Rescue Plan, they extended it. So we might have some self-employed people who come in this year for those first 90 days who might be eligible to get this sick leave credit part 1.
And to kind of piggyback on to what Gene's saying is there really isn't any question on that intake and interview sheet. So if you see somebody with self-employment income, right, that's their only source of income, you should ask, were you affected by COVID? So maybe we can get them some money that they didn't even know they were entitled to. So then there's a part 2 of this sick leave credit. And it's a lower limit, $200 a day limit. But this is for if you were unable to work because you had to care for somebody that was subject to COVID-19. I won't read everything here, or you had to care for your child, or you had to care for the child because the child care provider couldn't do it, or, these are similar circumstances. But basically, if you had to stay home because of COVID, we're going to find some way to get you some money out of this. Okay. Sick leave credit for self-employed individuals, is up to 10 lost work days between that period. You combine parts 1 or 2, and the days can't overlap, but they first use part 1 first. And remember, part 1 was if you were affected. Part 2 is if you had to care for somebody else who was affected. So bottom line of this is you get the higher benefit first, right? That's what the effect of that is. The first one was for you as the individual, but now we've got this family leave credit, right? So that if you're unable to work because you're caring for your child or daughter, or, they had to stay home from school. We had school closures and stuff. And even during the first part of this year, we had some school closures or some did it. So on this one, you could claim the family leave credit, as Gene had mentioned before, starting April 1st of 20 through 12/31. But then the American Rescue Plan extended that so that we could continue it from January 1st to March 31st. Okay, these get complicated and they're new. And last year, I didn't see any of these. We may see some this year. I'm going to tell you, don't get too freaked out about this, but if you're going to start doing this, get some help from your site coordinator so we can look up the rules and stuff of this, okay? So it's possible that they could receive both the sick leave credit and the family leave credit for a combined 70 lost work days. Now, yeah, I'll leave it there. Each spouse could claim the credit if they're each self-employed, and they're refundable credits. So this could be, that could be good. Right here down at the bottom of the credits menu is where we would go into that credit for sick leave and family leave for self-employed individuals. And as Jean was referring to a minute ago, we've got to enter in their net earnings from self-employment. And by the way, net earnings means gross receipts minus the expenses is the net earnings. Now, as I said, I haven't done one of these. Jean, maybe you have. If you finish Schedule C, will the tax software populate this box right here?
It does now. The first one or two that I did, we had to go back and figure it manually, but they've finally caught up.
Okay, so if you finished out the Schedule C, then it's going to populate this box with net earnings. And then you're going to have to click this and say, yes, I wasn't able to work due to COVID-19, right? You got to say yes or no. If you click no, it's not going to calculate anything. And then you hit on continue, okay? Then it says, tell us about any care you received or provided. I required care for myself. I provided care to another, or this is the family leave part. I provided care to my son or daughter because their school or place of care was closed. Then it's going to say number of days. If you required care for yourself, number of days. And now, okay, here's a screen I just realized. It's altogether possible. In fact, this happened a lot last year. You're working for an employer and you get COVID and they provided you sick leave. And then you decided, no, I'm not going back to work there. They're not safe. And you quit and you start working for yourself. So you may have gotten some from your employer. And if you did, you can't double dip in those. So you're going to have to put in here the amount of qualified sick leave you got from the employer. Okay. This is the screen where you provided care to another. Again, the number of days. And then if you got sick leave from your employer, you got to put it in because the software is going to adjust for that. Again, this is where you provided care to your son or daughter because their school or place of care was closed. Okay. And then if both you and your spouse have it, you need 2 of these Form 7202, and you would just click up here to add a new Form 7202. So once you do those, and again, I've always tried to encourage you, if you're doing all this stuff, be thinking about what the tax return is going to look like. If you're putting all of this stuff in, you expect to see a credit come through. And here's where you would see it is on Schedule 3, which says additional credits and payments. Remember, we've gone through all these non-refundable credits, and here's the other refundable credits. It should show up right here. And I know it's hard to see my cursor. I usually change it to a bigger one, but it's the part highlighted in red. Okay, so the CARES Act. Do you guys remember what EIP stands for? Remember I told you IRS that, Congress has got a name for it. They called it the, okay, now I'm forgetting, the economic impact payment, right? Because Congress really put in these payments to help the economy going. IRS calls it the recovery rebate credit. All of us normal people call it stimulus payments, right? So the CARES Act originally put that in, and then there was another act that put in another one in February, and then Biden came along with his American Rescue Plan and put in a third one. of that. There were several other things that really applied to employers that have employees, and I'm going to skip those, but you may have heard about the Paycheck Protection Program, or so we'll skip that. But then this part, the payroll tax deferral for self-employed individuals, it's gone in 2021, but we may see some people who come in that were self-employed that deferred. And Gene talked about that in an earlier one too. Retirement funds, there were special uses that you could take due to COVID, but that's gone in 2021. There was a temporary waiver of required minimum distributions, but that's gone in 2021. There used to be an above the line deduction for charitable contributions, but now that line, that was an adjustment, but now they moved it below the line in 2021. The limit on cash donations was raised. This well, it used to be $300 per household. Now they made it $300 for the taxpayer. And if you're married, $300 for the spouse. I don't want to say everybody in the household, because it's either 300 or 600, depending on whether you're single, head of household would be 300, or if you're married filing jointly would be 600. They made some tax-free employer education benefits. They modified that. There was always some tax-free employer education benefits.
Hey, Jim?
Yes.
That bullet at the top of the right-hand column, the above the line deduction.
Yeah.
I was doing a return last night and the charitable deductions were still above the line, above the adjusted gross income. But I'm not sure, now that I'm thinking about it, that might be that taxpayers still using the old 2020 form.
So we'll see. Okay.
Different schedule.
Yeah, and as Gene has mentioned before, we're in this time of teaching where tax layers doing modifications, and the point is okay. And I don't remember what the law said, that whether it was moved below or above the line. That's kind of for your information. Okay, it is what it is, and they'll get all of the updates done. And I still thought it was above the line, to tell you the truth, but I'm not 100% sure. But it really doesn't matter that much. It just affects AGI. So, and then this, okay, we talked about the limit on that, tax-free there. Qualified medical for HSA. I'm trying to think what changed in that. Oh yeah, okay, so this was the original CARES Act. This was what happened in 2020. This is the one that brought in those over-the-counter medication. You go buy aspirin, you can take it off of use your HSA to pay for that. It didn't used to be that liberal, okay? So it just made some liberal things. And then tax-free higher education emergency grants. This is good to know because I have seen this, okay? In fact, okay, I don't have time for all of these stories. Let's see if I can make this short. I retired last year and I'm taking a recording class at at Mesa Community College. I play music and I've got a recording studio in here. And I've been teaching software, for 30 years. The most complicated piece of software I found is this recording software that they have. It's called Pro Tools. So I'm taking a class. Long story short, I went through all kinds of things about getting the tuition right. I won't bore you, but I just got a notice about a week or two ago that, hey, you're getting a $500 credit to your account because of the Higher Education Emergency Relief Funds, HERF, call it. It actually kind of made me angry because I'm not the person who should be getting these emergency relief plans. Those should be going to the students or pursuing degrees and doing it. I'm taking a course for fun, right? But hey, they gave me 500 and I can't fight the district office. I'm going to take my 500 and I'm going to donate it to our faculty foundation. But the reason I'm telling you that story is some people may come in here and say, oh yeah, I got 500 bucks. This is not taxable income. These tax-free higher education grants, if a student comes in and says, oh yeah, I got this $500 grant, they shouldn't get a form. But remember, we're asking them, hey, did you have any other income? If they tell you, yeah, I got this higher education grant from Maricopa Colleges or Arizona State University, it is not taxable.
Jim,
Yes.
can I ask, so my daughter's in community college and she got some weird check out of nowhere. Is that what you're referring to? Like the schools got stimulus and they could decide how to disperse it?
Exactly.
Okay.
Yeah. And so Jennifer, I don't know if your daughter has to file a tax return or not, but that one, you don't even count that. That's not taxable.
It's basically just more stimulus. So it
exactly.
Okay.
That's exactly what it is.
But it just wasn't issued directly to the individuals, issued to an organization who could distribute it.
Correct.
Okay.
Exactly. There was a stimulus payment, and this is important to us. I've already explained this, but it's worth doing it again. In 2020, there were 2 stimulus payments that we had to account for on the return. One was issued in about March of 2020. The other was issued like in February of 2021, but we still counted it on the 2020 return. And then the third one, the big one, was about March or April. It was $1,400 per person. And this one we're going to have to account for on this return. And as I told you, our taxpayers should be coming in with a letter. IRS sends them a letter, says, hey, we gave you $1,400 or $2,800 or whatever. And it's a simple question on there under recovery rebate credit. Just put in what they got. Sometimes they didn't get as much as they're entitled to. Sometimes they got more than they were really entitled to, but they're not making people pay it back. Okay. The real thing that would probably happen here is they issued those stimulus payments based on either the 2019 or 2020 return. And what if somebody had a child in 2021? Well, they're entitled to an extra $1,400 payment, but they didn't get it. So now we're going to get it for them on this return. So this one is pretty important. So I think I've pretty much done this here. Here are some examples why they would get. See, they call this the recovery rebate credit because they treat it as a credit to your return. So if you didn't get the EIP, then this recovery rebate credit is going to give you that EIP or stimulus payment, right? I just give the general example if they had an additional qualifying dependent. And I use the case of a child, but maybe you started caring for your dad and they're eligible to be an other dependent on your return. Well, they would qualify for the $1,400. This is not likely to affect us because we're not dealing with higher income folks, but there was a phase out. If your income went above a certain amount, you didn't get as much. And they're basing that income on 2019 or 2020, and maybe your income dropped off in 2021. Maybe you couldn't work, right? So if you didn't get as much as you should have, you're going to be able to claim it on this one. So I'm not sure of a 2021 return, how they did it. In the 2020, right away, it took us to the screen right after we'd filled in the basic information. It took us to the screen and it said, did you receive an economic impact payment? And if you answered yes, and most people did, then it's going to ask you, how much did you get? And see, here's this notice right here that should come up. Okay, I just realized something, why I'm able to use my mouse here. It's because I pulled up the PDF of the slides instead of the PowerPoint, which now that I realize I like this better because I can highlight certain stuff. Okay.
Hey, Jim, I would tell you that so far the recovery rebate credit is still in the basic information because we hit it first, but it appears again when we get to the credits under the family leave and sick leave credit. There's also a repeat of it. So you could enter either place, but because it's so important for everybody to do, they put it up in front where you fill in the basic information.
Because this affects everybody. You know, and it may be that they're not entitled to anything, but we need to be able to reconcile it on this tax return. It affects every taxpayer. So when you go look at the return there on page 2, you're going to be able to see where that recovery rebate shows up, or it doesn't show up for that matter. Here's what we were, you know, Gene and I were kind of not sure where this is. This is looking at page 1 of the return where you have wages. And we were kind of pointing out, we're sure in 2020, it was an above the line extra charity. This is, if you took the standard deduction in 2020, you could take up to $300 extra, and it's an above the line. So it gets lopped off before you get down here to your standard deduction, before you get down to this one. For 2021, I don't think either of us are really sure. We read somewhere, and that's why we put it in the slides, that they moved it below the line. Okay, we're just going to have to wait and see. Here is one, and we already told you about this. This is going to be complicated for us because for 2 of these credits, for the earned income credit and the child tax credit, you can either use 2019 income or 2021. And if you remember, we showed you that chart of the earned income credit where it's like this bubble curve, right? Where the more you make, the more you get, but then you reach the top and the more you make, the less you get, right? It's this bubble curve. So, and there's no way to really tell, but if they're entitled to an earned income credit, if they're below that threshold that we kind of talked about, and by the way, it's in your 4012, there's a threshold. I can tell you right now, if you're married and got 3 kids, that threshold is about $57,000. So if you're below that, you're probably going to want to ask them is, what was your earned income like in 2019? I'm really not sure how we're going to deal with this at the site, but it could affect their return, and we should probably do our due diligence in trying to make sure we maximize their credit, because their 2019 earned income could affect it. Let me give you another example. For the child tax credit, it phased out. Somebody asked me about this, and we went and looked it up, and it phases out that child tax credit after about 150,000 of income. So maybe in 2021, you went back to work at your full-time job and you started making a lot of money. Again, we're not, now that I think about it, I'm explaining this and I'm thinking we're not going to see those people. But for your information, maybe they went back to work, but in 2020 or 2019, they were laid off. And so they maybe it's excluding their credit because of their income limitation in 21, but we could go back and use 2019 income for it. I don't think the legislators really thought this through about the complexities they're putting on tax preparers on this, but this wouldn't be the first time. Okay, we'll figure this out as we go. Whoops. This is right in the first screen, right? If I was on a TaxSlayer screen and I scrolled up above this is where you put in the address and dates of birth and social security numbers and stuff like that. And it has all of these extra questions. And don't ignore these, okay? Because like this one right here, taxpayer was over age 18 and a full-time student at an eligible institution. This might be for students that come into the colleges. We want to check this because this is going to help us determine whether or not they could be claimed on their parents' return. If the taxpayer was blind, I have seen these, okay? You're not likely to see deceased, right? Gene has highlighted this one in this slide too. This is where we would tell it to use the 2019 earned income to figure the 2021 earned income credit. We just need to be aware of this. Sorry, I'm using my mouse here and there, this is better. I'll use my keys so I don't jump around on you so much. So this is where, if you answered yes to that question, you're going to have, it's going to pull up another screen where you're going to have to put a designation. I'm going to skip this for now because we're not sure how we're going to do this too. So this is where we got through refundable and non-refundable credits. So this isn't where we're going to take our mid-morning break yet. We're going to start into session 5 before we do it. But before we get into session 5, why don't we do what we did yesterday at the beginning? And I meant to do this at the beginning, is let's address some of the questions that you've got about the test that you've been taking.
Jim, I've got my book open, and why don't you bring up the 6744 book?
I got it up.
Back to question 1. And as we talk about each question, we can, I can at least tell them where in Pub 4012 they might find the answer, because just going to remind you, we really aren't supposed to tell you any answers. It's okay if you talk amongst yourselves or text each other. That's a group work. But as an instructor, they kind of frown on us when we try and give you too much help. So there is a question though that we ran across that we think we need to help you with. So can you make that screen bigger, Jim?
Yes, I can. Thank you. How's that look?
There we go. Much better.
Okay, so we already answered the first one. We answered the second one last time. Here we didn't answer this one, right? What amount can Karen deduct as a charitable contribution when filing her 2021 tax return? Now, what do you need to know about this? You need to first determine, is she taking the standard deduction or itemizing deductions? And I'll give you a little hint here. You can probably tell from the answers here, you know, what the choice is. So what you have to determine is what amount does she get for additional? And I think all of you, that one's pretty easy. Okay.
If you need to go back and check your 4012, you can look in tab E on page 1 and you'll find the answer there.
So my suggestion to all of you, if you've got your book or get a notepad, write down these page references because it'll help you out a lot. Okay. So for question 3, he's saying go to E1 in the 4012. So,
just out of since we had a couple people join us today, let me run back to question 1. Question 1 on scenario 1, the answer is found on tab B, page 8. B as in boy, page 8. And the answers to question 2, you'll find the information on tab D, page 1.
So here was scenario 2, Paul and Maggie, and we didn't answer any of this because we covered this yesterday afternoon. The first one was, what is the maximum amount that Paul and Maggie are eligible to claim for the child tax credit? And to know that, A, you got to know how old the kids are, because remember, there's 2 different credits. And Gene's going to tell you where you can go find that information.
That's in tab G, page 2. G is in gorgeous.
Okay. Then the next one says
5, because tab 5 is, or excuse me, question 5 is also G, but it's a different page, G10.
So how much of the child care expenses can be used to claim the child independent care credit? So you have to go up here and look at, you know, what expenses that they paid, look at the rules for what eligible, you know, what's the limit on expenses, and, you know, that's enough. I would tell you there were other rules about this. They don't really come into play in this question, but in real life, you're going to want to make sure that they've covered all the other rules, such as, do you have the employer identification number or social security number of the payee, the person you paid it to, things such as that. Okay, so Carol, I'm sorry, go ahead, Gene.
All right, which, oh, we're on 3, right? Okay.
Yeah, we've done these 2. I was just kind of reinforcing what we've kind of said yesterday. That's all I was trying to do. So here's Carol. Oh, okay. So this is the FSA question. I'm sorry, the HSA questions right here. So Carol had an HSA and then she contributed money, and it looks like she her employer might have contributed some money too, right? And it looks like she took a distribution. Okay. So now what's it's asking, and this says Form 8889 Part 1 is used to report HSA contributions made by, and, you know, as I told you yesterday, I mean, I've done this sometimes. thinking Form 8889 Part 1, what is that asking? I just went and Googled the form and pulled it up, okay? But Gene, where are they going to find out this answer?
All three of these questions can be answered if you'll look in tab E, as in Edward, and on either page 7 or page 8 of tab E.
I'm going to give you a hint. These are pretty easy. These are not difficult. Don't overthink them, okay? Just read those pages in there and you'll get these right. So here's Barbara. Oh, this was the hard one. This was a hard one. This is the one, remember, we got grandma, and then we got the daughter, and then we got the granddaughter, right? And so what are they asking? They're saying for purpose of determining dependency, Marie meets the conditions to be the qualifying child. And we went over this one yesterday. And
that's found in tab C on pages 1 or 2. There's information on either of those pages, but it's tab C.
And then here's this one. Jenny is not eligible to claim Marie for the earned income credit because her filing status is married filing separate.
I3, I as in idiot, 3.
Read that carefully. I got this wrong. I just jumped to a conclusion. This is Michael, and it looks like he's going to want to itemize his deductions, and he's also got some gambling winnings, right? Or gambling winnings of $1,000, right? And it looks like he's got 2,000 of gambling losses down here too. So what's it asking? This one's asking if the mortgage insurance premium could be claimed as an itemized deduction. You don't even need to read up through all of this stuff. Gene, where are they going to find that?
Tab F, 9 and 11. So F9 for the first question and F11 for the second question.
And then what amount of gambling losses can he claim as a deduction on his Schedule A? Schedule A is where you claim itemized deductions. And so this question is assuming that he is going to itemize deductions.
That's F11.
F11. F is in Frank 11. Okay, Sean. So Sean's a student, 19. Looks like he lives on his own. They each pay their own expenses. So basically it's telling you his parents can't claim him, is what these fact patterns are telling you. So it's saying, first it's asking, do you have to file a tax return? And we kind of went over this yesterday. Gene, do you have a page reference for those people who weren't with us?
Actually, yeah, that's tab A. And the information I've got pages 1, 2, and 3. So I'm not sure if it's on each page or if it's somewhere in those 3 pages, but it's tab A.
Good.
And 14 is tab I, page 5.
Okay, so this is asking about the earned income credit. And I think what you're going to want to do in that earned income credit in 4012 is they give you one page that's for everybody, all the requirements. So you want to first make sure that he does that. And then there's another page about whether you've got a child or not, you know, what additional requirements there are. So review those kinds of things. But this one, in this case, you know, Sean doesn't have any qualifying children. So that kind of rules out some stuff there. Now we're into the tax returns. And of course, all of these, we were talking beforehand, and I didn't mention it, but Gene had mentioned, either, I forget if he mentioned it in this session or we just taught a live class, but it's really good stuff, is that when you're going through, there's a ton of facts in here, right? And sometimes it's really easy to miss something. It's probably pretty good to take a highlighter, and, you know, I did this in this document right here. You know, as you enter stuff in, cross it out or check mark it or do something. Make sure that you didn't forget to put in like the amount that she recovered from her pension and on earlier tax returns, things like that. So, and this one's got the Form 1099-C, so there's a wrinkle. Okay, so let's look at the questions. You know what? Maybe I want to point out something too. Yeah, you know, Jennifer, when this morning we were going over stuff, she kind of pointed this out, and I don't know that they did this on purpose or not. But notice here on this question, the taxpayer marked both yes and no. And I just want to remind you that if we were really doing this interview, we want to make sure we know whether it was yes or no. And in this one, I already did say that they got this form 1099-C. So if we were doing the interview, we would just mark out this no and say yes. I just kind of wanted to point that out. Let's go into the questions. So what's the taxable portion of Tara's pension from Oak Enterprises? And as I was telling you, and this is saying using the simplified method. And this is the harder one. You've got to really drill down and do that. But again, these scenarios 7, 8, and 9, I'm telling you right now, just do the return as accurately as you can and get the answers from the return. Sometimes you're able to get it just from the documents, but it's just really easier to make a mistake. It's easier to do the tax return completely to do this. And when you do this, if you've done the tax return, you're going to look on page 1. In page 1, down about line 7 or 8, it's going to say, oh, taxable or IRA distributions or distributions from a pension or that. It'll give you an amount. And then over on the right, it'll say, what's the taxable portion of that? So the return's going to tell you that right away.
So you have to do the return really to get the answer. But if you're struggling with where to put the information into the return, you can look in your 4012 and in tab D, page 34, 35, 36, and 37 are all the screens and the instructions for how to use the simplified method. So that's D is the tab, and it's pages 34 to 37.
And does it circle on that exactly where to click on how to calculate the taxable amount?
You know, I think it does, but I don't have the book open in front of me, so I can't really check it right now.
Good. I'm going to open it right here. So because if they don't really know how to get there, they're going to be lost. And you were saying go to tab D?
Correct.
What
page
pages?
34.
Pardon me?
D34.
You can type, up in the left-hand corner, you can type it in.
Right there. Jennifer's absolutely right. And thanks for telling me that. I'm going to type in D34 is what he said. I just typed in there and I think I got a hit. I hit enter. Didn't take me there. There we go. Okay, good. I just want to make sure that here, yes, it does tell you right there on D34. This is what I want you to be. It's right here, this section. Do you need to calculate your taxable amount? And it says click here for options. And I want you to be sure that this is how you're going to get to that simplified method. Is you've got to say click here for options, and then it's going to ask you questions, and the answers to those questions are up in the fact pattern. Like it's going to ask you, when did they start the annuity? Is it a joint and survivor annuity? And in fact, I should go down here. Box 7, taxable amount not determined, right? This is where you're going to say simplified method. So here it's walking you through. You're going to click on this. We want to use the simplified method. Okay. And then here you got okay, here's the screen you're going to get to. And this gives you specific instructions of how to do this. And pay real close attention to this one right here. Okay. When you try that, we've given you our email addresses and phone numbers. If you get stuck, we'll help you with it too. Okay, so next it's going to say none of Tara's Social Security income is taxable. Now, what you do if you finish the return, you go look on page 1, and again, it's going to have another box right there, Social Security income, and the amount that's taxable. It's going to tell you right there. While we're on this right here, I want to reemphasize something. These are the test questions. What if we went to the retest questions? I'm going to just skip to there for a second and scroll down here to scenario 7. Oh, okay. So this one's asking you to write in what her Social Security income is. I'm going to tell you, don't try to look in the 4012 for this. Don't try to Google it. You'll find worksheets that will just give you a headache. You got to do the tax return, and you got to complete the whole tax return, because it all depends on what their other income is before they can calculate this properly. Okay. Back into our scenario here. Hold on. So 17, what is the amount of other income reported on the Washington's Form 1040 Schedule 1? Again, you need to do the tax return, you can do it, but this other income comes from a variety of things.
If you need to see where that form is in the 4012, you can look on D1, mentions other income, and also tab D53 will show you the menu screen for other income. So D1 or D53.
So in this one, you should be able to, we've covered adjustments, and we covered adjustments that were qualified education expenses. And what page in the 4012 is that one going to be found on?
I don't have it written down. It was so easy.
This one is pretty easy. You got to know two things: is how much are they allowed for expenses, and how many hours do they have to work? So you can go look that one up pretty easy. Okay, Washington standard deduction on their 2021 tax return, and this one's a little tricky. You know, it's real easy to just go into that chart. Go ahead. What pages are those charts on?
A1.
But I think you need to go down to another chart on A2 or A3.
I just have A1 down, but you might be right. There's 3 charts right there at the beginning of the book. So,
and the reason I say that is because if you go up in the fact patterns, we're going to refer back. Remember, what are the things that determine your standard deduction? One is filing status. That's the easy one. They're married filing joint, and I think it's 25,100. But there are 2 other things that could increase that standard deduction. One is age, one is blindness. So be sure you pay attention to that. Total qualified expenses for the American Opportunity Credit. And, you know, again, whether you do the tax return or not, you pretty much have to calculate this manually. And I'll give you a hint. There's one expense that is not a qualified educational expense. But where do we list those? Oh, this is in tab. I know this off the top of my head because I use this chart a lot. Remember J2 and J3? Those are those fold open charts. You got to turn your 4012 sideways to look at. And it looks for American Opportunity Credit, Lifetime Learning Credit. And then the rows are going to say, what are the eligible expenses for each one of these credits? And look through that. And the key thing here is it required to be paid to the institution? There's what you got to think about here. Which of the following credits can they claim? And this is going to be all over the 4012. You got to go look for all of these other credits. Some you could
tab G.
Put tab G, right? That's enough. What is their total federal income tax withholding? And this, you could go add it up from the forms if you wanted to. I would tell you, just get the tax return done, go to page 2, and it tells you right there what the federal withholding is. And it also tells you where it comes from. It'll say W-2 this much, 1099s this much. Okay, Cynthia Simon. So what was Cynthia here? Oh, she's got a Schedule C. This there, and then, oh, look, okay. For those of you who weren't on the call in the morning early, just to make sure you know, we told you to change the wording on these 2 things right here. We told you that in your book or whatever, or make a note of it, just cross off here. Cynthia took an early distribution from her IRA to pay her educational expenses. When I read this, this tells me, because I look in the next one, it says Cynthia is paying off her student loan. I took that off to mean she took an early distribution out of her plan to pay off her existing student loans. That's not the case. What they're trying to say here is she's in a MBA program right now, and she took an early distribution to pay on her educational expenses, or to pay her educational expenses. And then when this one says Cynthia is paying off her student loans, change that off to on. She is paying on her student loan. And that way, because when you get down here, you're going to see she has a 1098E, which is saying she's paid interest expense. Hang on, here we go. Here's her 1098E, and she paid this much in interest. But she did not pay off her student loans. Okay, so that tripped me up, and I want to make sure it doesn't trip you up. Okay, let's look at the questions on here. Oh, I guess she also had some capital gain, some capital gain transactions. She had a brokerage statement, and you had to go in from that brokerage statement, and you had to input the capital gains transactions for that. And then when you do that, you can go look on the finished tax return and go look on Schedule D and get this answer. But it's asking for the net short-term capital gain reported on Schedule D.
If you need help figuring out where to enter that information, tab D, page 24, has information about your capital gain entrance.
And how you enter it into TaxSlayer. So,
right.
So this one, the next one says, which of the following cannot be claimed as a business expense? And if you remember in our lecture yesterday, we talked about the general thing about it being ordinary and necessary. And I also talked a lot about meals and entertainment, what was deductible about that. But first of all, you could probably go through, and here's a test taking skill, is you can probably determine which one of these really are ordinary and necessary to carry on a business. And one might be or not be, right? But, you know. Do you have a page reference for this where they talk about types of ordinary and necessary business expenses?
Yeah, it's tab D, page 20.
Okay. What is the amount that Cynthia can take as a student loan interest deduction? That one you really don't need to do the tax return for, but where would you look on the 4012 for that?
Tab E, as in Edward, page 11.
Okay. And then this one you need to read really carefully here. What is the total amount of the advanced premium tax credit that Cynthia received in 2021? And where did they get that? Pardon me?
We haven't gotten there yet.
Okay, so what's the amount of her lifetime learning credit? So to be able to answer this, you need to be able to determine what were the allowable expenses, and does she get, you know, how do you calculate the lifetime learning credit? Gene, do you have a page reference for that?
You know that one, J2.
Oh, J2, right, yeah, right. So then you have to go up and look at, in the fact pattern, what were her educational expenses and what were the kind of courses that she took, because you're going to find out the lifetime learning credit. You can take courses that improve your job skills. I forget what Cynthia was doing. Oh, she's going in an MBA program, right?
Yeah.
So on that J2 and J3, look at the differences between American Opportunity Credit and Lifetime Learning Credit and what that is. Okay, this is the one that kind of tripped me up, and this is why I gave you that wording change in there.
And
it says Cynthia will have to pay $200 additional tax because she received the early distribution from her IRA. And we want you to be able to go look up the exceptions to the 10% penalty. This is that 10% penalty. Does she really have to pay that? And what page would they tell you that's on, Gene?
There's two pages. One is D, page 40, D as in David, and the other one is H, page 4, H is in hot.
Okay, good. And how can Cynthia prevent having a balance due next year? And we haven't really talked about this. This is more of a common sense thing, but I mean, what would be the effect? You can reason this out. If she increased her withholding on her W-4, what would the effect of that be on the tax return? Okay. What if she made estimated tax payments? And we didn't, I think I touched on this a little bit. No, we're going to touch on that today, right? About what estimated tax payments are. And IRS does provide a withholding calculator that, you know, you can estimate withholding for the next year. Okay. So we're not really going to talk about the IRS withholding calculator.
And they could always go ahead and check tab H, page 7, and get more information about that.
Oh, thank you. Good. H7. Good. Okay, so here we got Richard. What's going on with Richard? Oh, okay. He's paid childcare expenses for his child. I want to point something out just because I made a big deal about this year. We're really going to have to pay attention to this advanced child tax credit payments because they started sending these things out automatically to folks who would qualify, just to kind of help them through COVID, right? And it was only for half the year, so they would have only gotten half of the advanced payments. There was an option for folks. Some folks would realize, hey, I'm not going to be entitled to this. I gave away the dependency exception to my ex-spouse. She gets it in 2021. So I don't want them to start sending me, you know, these payments. And you could have gone on to IRS and you could have elected not to receive them. I'm going to tell you my judgment. It's my opinion. I don't think we're going to see many taxpayers who elected not to receive them. They just did this way to kind of make this easier. Plus, I don't think that TaxSlayer has gotten this all worked out to where they can calculate it correctly yet. So they made this easier, but I just kind of wanted to point that out here. Oh, okay, and so here it's telling you that they received their third economic impact payment in the amount of $2,800. I don't know if this kind of hits you guys right here, but kind of hits me. How much should they have gotten? But I'll let you figure that out. Okay, so let's look at the questions. You may not even need to know that. Oh, what's his filing status? And we already answered that, but for those who weren't on the call early yesterday morning, what page did we tell them to go look at? A1 or I forget where it was.
Actually, this one's in tab B, page 8.
Yeah,
That's
the flow chart, right? Yeah.
Yeah.
Okay, adjusted gross income. I think you pretty much need to do the tax return to get this correct.
Yep.
Okay. And then which credits can they claim?
That's tab G.
Tab G. Okay. Use your test taking skills here too. Because, you know, if you figure out that they're not entitled to one, you know, you could cross out one of these two here, but go ahead and do that. Oh,
You said tab G?
Correct. G
Tab
is
G,
in
right? That no pages? Okay, thank you.
Yeah, there's no pages. I think it's G10 and what's the other one here? G10 for one of them and G3 or 4 for the other one. I'll have to go back.
Okay, thank you.
34, Richard will use his 2019 earned income rather than his 2021 earned income to calculate the earned income tax credit on his 2021 tax return because his 2019 earned income is higher than 2021. And the only way you really know this is by doing the tax return, and they tell you up there in the fact pattern what his 2019 income is. And so you need to go look at, I think on the earned income credit form, I forget the number of the form, up at the top, it's going to tell you whether or not it used the 2019 earned income credit. But you've got to go look at that form to really answer this correctly.
And the information is in tab I.
Okay, and then we get child and dependent care credit from Form 2441 is reported as a non-refundable credit on Form 1040 Schedule 3. And to answer this, go ahead and tell them what page it's on.
It's G, page 10.
But we talked yesterday about these credits and what the last tax acts did versus refundable versus non-refundable credit. And if you remember what we said about that, you don't even have to go look it up. Okay, how are we doing?
Well, it's 10:15 and now would be a good time, I think, to take the break instead now. And then when we come back from the break at 10:30, let's go ahead and start what we should have started this morning.
I agree. So let me stop sharing here.